the fact that we worked our way from individuals to high net worth individuals to private companies up to, the tech innovators, and now we're working on the mega public corps and the banks, right? That's a sign of the asset improving. So with exponential processes, there's a whole lot of nothing apparently going on as the process builds and builds. And all of a sudden, there's a little blip. And then all of a sudden, you have more action, right? Like with Apple stock, right? It took forever, 40 years to make it to $1 trillion. And it took like 18 months to make it to $2 trillion. It's like, but you see that as a phenomenon. And that's the phenomena here organically.
MicroStrategy founder and executive chairman Michael Saylor believes we've entered Bitcoin's organically viral era, marked by rapid and transformative growth for the leading cryptocurrency. Saylor highlights Bitcoin's rise from magic internet money to $1 trillion asset now embraced by major corporations and financial giants. U.S. banks like J.P. Morgan, Goldman Sachs, and BNY Mellon, former skeptics of cryptocurrency, are now vying to provide Bitcoin and Ethereum custody services for high net worth clients. Reports indicate BNY Mellon, one of the world's largest custodian banks, is pursuing regulatory approvals to offer crypto custody solutions at scale, aiming to tap into the lucrative crypto market. Saylor, who predicts a long-term Bitcoin valuation of $13 million, views these developments as just the beginning of a seismic shift for cryptocurrency. He believes regulatory hurdles are steadily being dismantled, paving the way for not only institutional investors but also multi-trillion-dollar corporations like Apple and Microsoft to invest in Bitcoin. This growing acceptance, Saylor asserts, signifies a revolutionary shift in the financial industry, opening Bitcoin to new levels of mainstream adoption and integration. According to Saylor, this paradigm shift has the potential to redefine global finance and investing. In a recent interview with Onramp Media, he described this moment as a turning point that will forever transform finance and the global economy. Now, let's delve into clips from Saylor's interview to explore his insights on Bitcoin's explosive growth era. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
I think the three big planks of corporate adoption of Bitcoin are, number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money on an accounting basis, it would look like you're losing money. So I think that was the first challenge. The second challenge is fair treatment as an institutional asset, via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real asset. You have all the skeptics saying it's tulip bulbs or it's a Ponzi scheme or something. But of course, the SEC would never approve an ETF for a Ponzi scheme. So probably for people that don't really think hard one way or the other about this, they're reflexive investors, they're looking for that endorsement from the most important financial regulator in the world, or regulators in the world. So that was plank 2. And I think plank 3 is fair treatment from the banking system. So right now, it's impossible for most major banks to custody Bitcoin, buy Bitcoin, or sell Bitcoin for you. there are a few banks in Switzerland. I mean, there's Standard Chartered Bank in Europe. There are some of the banks in Brazil that can handle the asset. But the major corporations, right, the Microsoft, the Google, the Amazon, the Apples of the world, they wire billions of dollars a month to a too big to fail bank, right? A bank with $1 trillion balance sheet. And right now they wire the billions of dollars a month to buy sovereign debt. They're just saying, okay, take this $1 billion today and buy T-bills with it. And it's like a 10-second transaction. It's routine. They've been doing with the business with the same bank for 30 years, 40 years. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve.
In his interview, Saylor discusses the Bitcoin 24 model, an open-source macro framework projecting Bitcoin's growth and adoption over the next 21 years. This model, along with smaller-scale models, helps forecast Bitcoin strategies for individuals, corporations, institutions, and even nation-states. The model offers both a base and bull case for Bitcoin's future, aligning with Saylor's $13 million base case price target. Earlier this year, at a conference in Nashville, Saylor shared his 2045 macro forecast for Bitcoin, presenting bear, base, and bull scenarios for the cryptocurrency. Saylor envisions Bitcoin's price appreciating at least 4,300%, rising from today's price of $68,000 to $3 million per coin, which he considers the bear case. His base case foresees Bitcoin reaching $13 million by 2045, representing a 19,000% increase from current prices. At this level, Bitcoin's market cap would be approximately $280 trillion, a 280-fold jump from today's $1.3 trillion market cap. In his conversation with Onramp Media, Saylor reiterates his high-confidence forecast, asserting that no other asset class or business model will match Bitcoin's expected returns in the years ahead. Let's explore more insights from Saylor's interview as he breaks down the Bitcoin 24 model and his projections.
What I think is Bitcoin is the risk-free return for a Bitcoin maximalist. So just start there, right? Bitcoin is the risk-free return. And the question is, do you want to take risk or not? Right? So, and I ask this question, like in my personal life, like we've created the Bitcoin 24 model. The Bitcoin 24 model is based on a lot of your work, Jesse. You'll find we started with your work and then we created it. We put it in the public domain. And the Bitcoin 24 model, you can go Google it and find it on GitHub. I think 20,000 people have grabbed it, since I tweeted it. And in it, you've got all of the assumptions about the macro environment. You can crank in your own inflation assumptions, your own innovation assumptions, your own monetization and demonetization assumptions about gold and art and real estate and bonds and currency. And then you can put in all your own Bitcoin growth assumptions and create a bull case and a base case and a bear case. And then after that, there are micro models. And so you can model your family and decide, do you want to move to UAE or not? And how much money can you generate and when? And how much assets do you start with? And you're going to inherit money from your rich aunt and, what. And then you could decide, if you can mortgage your house or not mortgage your house. And so you've got a micro model, and it's also got a corporate model. And, if you're a corporation, you can crank in your corporate model. You can also build your own. I mean, it's an open spreadsheet. Just grab the thing, duplicate it, and be off to the races. And you can create a institutional model. Look, the answer is different if you're running Harvard's endowment than if you're running, the Myers Family Trust, than if you're an individual, than if you're a Bitcoin miner, or if you're an operating company, or if you're a bakery, or if you're Tahini Brothers, right? I mean, everybody's got their own thing. So that model is very open, but what I've done is I cranked in my assumptions and I have presented my base case and in Nashville. And my base case is Bitcoin goes to 13 million a coin, and it's the ARR of 29% ARR over 21 years. It's like you don't have to accept my assumptions. Make your own. Just go down. If you can use a spreadsheet and type in numbers and hit save, you can do your own model for the next, and you can do it in 10 minutes, and you'll generate lots of beautiful graphs, and you'll decide whatever you'll decide. But if we start with my base case is the risk-free return is 29% ARR for 21 years, which means that when you pitch me an idea, if you come to me and say, hey, I got a new Bitcoin custody thing, or I got a new hardware wallet, or I got, a new Bitcoin whatever banking thing, or I got a new whatever, I'm like, well, so can you guarantee me 29% plus the risk premium, which is probably 8%, 6, 8, 10%. It's like the risk premium on a mega corporation like Disney or whatever is 4 or 5%. And the risk premium on a small startup has got to be 20%. Okay. And so if you pitched me an idea and said, okay, I guarantee you 40% ARR for the next 21 years. And I'm like, and is it going to be capital free? Like I don't have to bother with it and I don't have to put any more money in later. You're like, well, if you promise me all that stuff, I would like, okay, well, let me think about it. But probably if you gave me 10 of those ideas, I probably still don't want them because it's just a distraction. Because my view is 29% ARR risk-free.
Recently, Saylor faced criticism for his comments about paranoid crypto anarchists, a term he used for crypto investors wary of centralized institutions like BlackRock holding Bitcoin without compromising its core principles. In an interview with Madison REI, he acknowledged concerns from the original Bitcoin community, which is skeptical about major entities like MicroStrategy and BlackRock entering the crypto space. When asked about the risks of storing Bitcoin on centralized platforms, especially given potential government seizure, Saylor suggested that Bitcoin held by unregulated entities or individuals with no tax or reporting requirements might be more vulnerable. In contrast, he argued that institutions like BlackRock, Fidelity, and JP Morgan reduce seizure risks due to their ties with lawmakers and politicians. These remarks sparked backlash within the crypto community. Prominent figures like Bitcoin OG Max Keiser criticized Saylor, saying he misinterprets Bitcoin's foundational principles. Adam C., founder of Mana Bitcoin, noted that Saylor's views seem to have shifted, as he once spoke more thoughtfully about Bitcoin. Mandry, another well-known Bitcoin advocate, also voiced his frustration, accusing Saylor of misunderstanding Bitcoin's mission of separating money from state control. Do you agree with Saylor's stance on self-custody and concerns about paranoid crypto anarchists, or do you side with those critiquing his perspective? Share your thoughts in the comments below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.